Good morning, traders. This is Buyer from London, and the currency pair I'm looking at today is the Aussie Kiwi on the daily chart. My bias is to the downside. What I've identified on the daily chart is the downward channel, where price is contained within this channel since April 27th, to the end of April, and I'm just looking to literally take a trade in the direction of the previous price trend, which is to the downside, right? At the moment, price is currently consolidating and rallying, but I believe this is some kind of correction. So I'm treating this rally as a short opportunity. Now, obviously, the ideal point of entry will be when price tag the upper boundary of this channel, the uptrend line. Sorry, this trend line of the channel. But however, if you look at the recent price action, price doesn't necessarily have to tag this line before it moves downwards. If you look at these 2 points here, there's 1.317, this point here and that point there, price didn't tag that line before it moves further downwards, and that's literally because of strong resistance at this zone. You could see a strong support onto resistance here at this point, at this point, at this point, at this point. So that was a very significant price level where there's a lot of reaction in the past to that price level. So that being said, it's not certain that price will tag this line before it moves further downward. So what I'm looking to do is literally move to the lower chart to identify an entry point. And that being said, I'm going using the 4-hour chart. On the 4-hour chart, what we have is a bat pattern that I've defined a resistance zone which coincides to where price did consolidate previously before breaking further downwards. Now this pattern is a bat pattern, is a 5-point structure. You go X, A, B, C, D, and D should end within this resistance zone. Now the point B is literally 50% retracement of the XA leg, and you can see it's right to the pip, so it's very valid. The point C is 88.6 retracement of the AB leg. Again, this is of the AB leg, which is right to the pip as well, right there, the C point. So this is a very symmetrical pattern where the Fibonacci price levels are really precise. So that kind of gives more significant the resistance level defined by this price pattern. Now the resistance zone is defined by 3 different price levels from this Fibonacci extension of this pattern. So if you look at the upper boundary, it's the 88.6 retracement of the XA leg. The lower boundary is the 161.8 retracement extension of the BC leg, and the third level is literally 161.8 extension of the AB leg projected from the C point. So what we have here is literally between 12727 and 12697 is the resistance zone. That's literally 30 pips. That's 30 pips range for resistance zone. Now on the daily, you can actually see some kind of RSI divergence as well. See price drifting lower while RSI is going up. It levels, but now is, if I just draw the line, RSI literally is moving to the upside while price is going down. So that tells me like price should continue correcting and rallying in the near term before ultimately moving further downwards. So in terms of entry points, that's what the bat pattern defines for us on the 4-hour chart. And so with that being said, I'll have placing an entry order at 1.2697 and 1.2727. It's literally at the lower boundary and upper boundary of the resistance zone. So that's where the entry order would be to go short. In terms of stop loss, back to the daily chart, the stop loss should be literally above this channel line, above this upper boundary of this channel, so around between 12800 and 12900. But just to be specific, If you look at the candle that broke below this range here, this mini range we have here is this candle, and the high of that candle is 1.2857. So I want to place my stop loss at 1.2860. So stop line 1.2860, that's above this candle here, and far above the channel as well, so out of the upper band of the channel. So if price did go upward and move downward, I don't want to get stopped at. So that's stop loss there. In terms of profit target, literally I'm looking to continue trading within this channel. So as long as price stays within this channel, I'll stay in the trade and trade my stop. But if price break above this channel and close above this channel, the upper boundary of this channel, then I want to close out the trade. So in terms of near-term targets, probably say this point here, 1.2620. If price reaches this point B here, I want to move my stop to break even. If price to break even, and in term, and obviously I want to take a partial profit once I make twice the amount I'm risking. So if you calculate the number of stop loss and multiply by 2, that's when I take my first target. But ultimately I want to stay in this trade as long as price remain this within this channel. So the ultimate, it could be for the next couple of weeks or couple of months, who knows. But yeah, so entry order at 12697 and 12727, stop loss at 12860, which is above this candle here, which is coincide with that candle there that broke below this range. Once one is an open objective, but once price move to point B, move stop to break even, and once one price move in your in the favorable direction twice the amount of your risk, take partial profit, and basically just trail the stop till price till the upper boundary of this channel has been invalidated, right? Has been, sorry, broken and breached. So that will be all. Thank you very much, and good luck.